Welcome to the Ontario Mortgage and Real Estate Insights Podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoen, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today we're kicking off with some significant economic news. Canada is likely in a technical recession, according to a recent survey of economists. Janine, what are your thoughts on this?
Well, Steve, it's certainly a tough pill to swallow. The uncertainty around Canada's trade relationship with the United States is causing a lot of anxiety, not just for businesses, but also for homeowners and potential buyers. The slowdown in key sectors, especially with exports dropping, is a major concern. What do you make of it?
I agree, Janine. The survey conducted by Bloomberg projects that Canada's output will shrink by 1% on an annualized basis in the second quarter of 2025 and by 0.1% in the third quarter. These figures meet the criteria for a technical recession. It's a challenging time for the economy, especially after U.S. importers pulled forward shipments earlier in the year due to President Donald Trump's tariff warnings, leading to a steep annualized drop in exports.
Yes, and while there's hope for a modest recovery for exporters later in the year, the immediate impact on the housing market is undeniable. Both home prices and sales are experiencing a slowdown, and experts are suggesting that housing starts could be weaker in the latter half of 2025 compared to the second quarter. It's important for homeowners and potential buyers to stay informed and prepared for these economic headwinds.
That's true, Janine. The Bank of Canada is taking a cautious stance in response to these challenges. Governor Tiff Macklem emphasized the need to reduce uncertainty to make forward-looking monetary policy decisions. According to Bloomberg's World Interest Rate Probability, there's less than a 30% chance of an interest rate change at the bank's June meeting. This cautious approach reflects the complexities of the current economic landscape.
And let's not forget the projected rise in unemployment, expected to reach 7.2% in the second half of the year before easing in 2026. Inflation is also anticipated to remain above the central bank's target, with forecasts at 2.1% in the third quarter and 2.2% in the fourth. It's a challenging environment, but as always, it's crucial to stay informed and make decisions based on the most current data available.
Absolutely, Janine. The political landscape is also playing a crucial role. Prime Minister Mark Carney is set to meet with Trump at the G7 Leaders Summit in Alberta in June. This meeting could be pivotal, especially since Carney has previously warned that the era of deepening integration between the two countries has concluded. Despite these challenges, economists still expect gross domestic product to rise by 1.2% in 2025 and 1% in 2026, which is somewhat reassuring.
Yes, it is reassuring, Steve. It's important for everyone to keep an eye on these developments and understand how they might impact their financial and home ownership plans. As always, we'll continue to provide updates and insights to help our listeners navigate these complex times.
Shifting gears a bit, Janine, let's talk about some positive news amidst the economic challenges we've been discussing. Recent reports indicate that 7 Canadian cities experienced improvements in mortgage affordability in April. This is a bit of a silver lining for potential homeowners.
Yes, Steve, it's certainly a welcome development. For many prospective buyers, affordability is a key factor in their decision to enter the housing market. Hamilton, in particular, stands out as having the greatest improvement in affordability during April, which is encouraging for those looking to buy in the area.
That's right, Janine. Hamilton saw a significant reduction in the proportion of household income required for mortgage payments. It's a sign that market conditions may be easing a bit, at least in certain regions. However, it's important to note that not all cities experienced improvements. Regina, for instance, was reported to have the worst mortgage affordability conditions among the cities surveyed.
It's a reminder that while some areas are seeing positive changes, others are still struggling. The differences in affordability can be attributed to various factors, including local economic conditions, housing supply, and demand dynamics. It's crucial for potential buyers to research these aspects thoroughly when considering a home purchase.
Absolutely, and it's interesting to see how these regional variations play out. According to the report, the improvements in affordability were largely driven by a combination of slightly lower home prices and stable mortgage rates in those cities. It highlights the importance of keeping a close eye on interest rates and market trends when planning a home purchase.
Indeed, Steve. The stability in mortgage rates, paired with a slight dip in prices, can make a big difference for buyers. It's also a good time for those considering refinancing options to explore their possibilities. As always, it's about making informed decisions based on the best available data.
And while these improvements are promising, it's essential not to overlook the broader economic context we've been discussing. Potential buyers should remain cautious and ensure they have a solid understanding of their financial situation and the potential risks involved.
Exactly, Steve. It's heartening to see some positive trends, but it's also important to approach the market with eyes wide open. We'll continue to monitor these developments and provide updates to help our listeners navigate the ever-changing real estate landscape.
In our final segment today, we're taking a closer look at the 2025 housing market in Canada, which, despite current challenges, still holds potential for a solid year ahead. However, it largely hinges on developments in the ongoing tariff situation between Canada and the United States.
That's right, Steve. The trade tensions initiated by President Donald Trump's tariffs on Canadian imports have certainly cast a shadow over the market. The uncertainty has caused many potential buyers to hesitate, concerned about job security and economic stability.
Indeed, Janine. This economic uncertainty has led to a cooling effect in the housing and mortgage markets. According to Canadian Mortgage Professional, sales have dropped and prices have slipped across most markets compared to last year. Yet, there are still opportunities for those who are financially secure.
Yes, Steve. As Kingsley Ma from Remax Canada pointed out, those with stable jobs who have been able to save for a down payment might find this a favorable time to buy, thanks to moderating prices and lower borrowing costs. It's about finding the silver lining in a challenging situation.
Exactly, Janine. While overall prices have softened and inventories are up, the market conditions present a unique chance for some buyers. However, not all regions are affected equally. For instance, Edmonton and Calgary have seen robust activity due to their affordability and high livability.
That's a great point, Steve. Despite the broader economic slowdown, these cities continue to attract interest from buyers, particularly those from outside Alberta. It's a reminder that regional variations can offer different opportunities within the national market.
Absolutely, Janine. But for the housing market to truly warm up, we need to see progress in the trade negotiations. Prime Minister Mark Carney's recent visit to the White House has reportedly eased some tensions, but a concrete trade deal is essential for a more optimistic outlook.
That's crucial, Steve. A resolution to the tariff issues could quickly change the market dynamics, potentially leading to increased activity and even a buyer's market in many areas. Until then, it's important for buyers to stay informed and cautious.
Precisely, Janine. The situation remains fluid, and while there are promising signs, the broader economic context cannot be ignored. As we continue to monitor these developments, we'll keep providing our listeners with the insights they need to navigate these changes.
And on that note, let's wrap up today's episode. Remember, staying informed is key to making the best decisions in this ever-evolving market.
Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.